Hello smart money traders, welcome back to the channel. In this video I want to show you the correct way to trade ICT silver bullet trading strategy according to the founder of ICT himself. I personally have taught this same strategy on this YouTube channel, but I've taught it wrongly because the founder of this same strategy has taught it by himself in the last 5 days, and guys, what he taught is totally different from what we've been doing. Even though they are somehow similar, I want to show you what the founder of this same strategy taught according to his word. Everything I'm going to be doing right here is to simplify what he has already done. You can find it on his YouTube channel, but basically you're going to find some difficulty. I'm going to simplify it to you in this particular video, how to basically trade it. So let's get into that. Now, the first thing you want to do is to basically learn the very basic of this same strategy. And then in the way he taught it, we're going to get at least 3 setups in a day. I've written down almost everything for us right here. If I scroll down, look at what we are expecting in this strategy. These are the major things you're going to focus on. The framework for this ICT silver bullet trade entry or the setup is that we're going to focus majorly on the previous day high or low draw on liquidity, previous session high or low draw on liquidity, previous week high or low draw on liquidity. That is our target. So basically what we're saying is that if you have trade creating something like this, let's say this is the low of the day, then next day we're going to focus majorly on draw on liquidity below this area. So that is what previous day high or low draw on liquidity majorly means. I'm going to show you that once I go back to my chart. And then this strategy still works on USD paired currency or assets that are directly related to the USD. Okay, and then the time frame for trading this is this particular time frame. Make sure you jot out everything I have right here, or you can simply screenshot it. So we have 3 different setups. We are expecting 3 different setups in a day for this silver bullet trading strategy. This is actually one of the best ICT strategy you can find out there. So we are going to focus on 3 a.m. to 4 a.m. New York time, not New York session. I said New York time. I'm going to show you how to get your trading view to New York time basically, and then you're going to get the setup. I've basically simplified everything for you in this video. He actually taught it in depthly, but you're going to find some difficulty understanding it if you have not been watching the founder of ICT himself. Now, the last setup we're going to look out for is 2 p.m. to 3 p.m. New York time. So majorly these are the times we're going to focus on, and then make sure that any trade you're going to take must have a trade probability of 15 to 20 pips. That is the target. If the target reach up to these pips, then it's going to be a very beautiful trade. Now I'm going to show you how to use this simple strategy. So basically, as we usually do in our silver bullet strategy, we're going to delineate all the time right here. So to get New York time, all you have to do is to simply come here to where you see this time zone, click on it. Once you click on it, scroll down to where you see New York -4 UTC, Universal Standard Time. This is how to get it for yourself. So once you've done that, the next thing you're going to do is to come over here. Let me show you something. Come to where you see indicators, click on it and type the word sessions on chart. I'm basically giving you something very specific in this particular video. Sessions on chart, this particular indicator. Put 3 of these indicators on your trading view. So once you've done that, the next thing to do is to basically set up those times I've shown you. The first thing to do is to come over here to the first indicator, click on settings, and then take out London and take out Tokyo. And then the next thing is to get 3 a.m. okay, and then 4 a.m. So this is the first thing you're going to do for the first sessions indicator on your chart. The second thing is to also set up this one, take out London, take out Tokyo, because we are expecting 3 different setups. That is 9:30 this time around, 9:30 and 11 a.m. New York time. Just get the setup on your trading view. Don't worry about converting the time to your time zone. Just get the setups. With this indicator, you're going to get the best. Take out this, take out this. Then the last one is 2 p.m. to 3 p.m. So these are all the delineations you need. If I scroll down, you're going to see them right here. This is it. This is it, guys. Right trading time. You can see 3 a.m. to 4 a.m., 9:30 a.m. to 11 a.m., 2 p.m. to 3 p.m. So these are the setups. This is according to how Michael Hodison, the founder of ICT, shout out to him, taught this same strategy. So basically what you stand to have today is to have 1, 2, 3, at least 3 setups in a day if you are carefully watching your chart. So let's get into trading this same simple strategy I'm showing you in this particular video. The way he taught it is that once you see your chart, now you're going to go to 5 minutes. This is 5-minute time frame. And then you look out for how this price is behaving. You see price coming to this area, and then once we come to this place, we took out this low. Okay, inside this session we took out this low. So we're going to focus on this break of structure. Now it is simple and it is easy to trade this strategy. What do? We look out for the most nearest fair value gap. According to the trade entry model, if I scroll down, you're going to see that we are going to use the classic ICT optimal trade entry. I hope you know that. I'm going to show you that. If you're watching ICT, or if you've not been watching ICT videos, you can watch them on my YouTube channel. And then confluence of the 2022 ICT membership YouTube model. So this is how you can basically get your trade entry. That's what ICT said himself, but I'm going to show you what those things means. Now what you're going to do is to basically look for your Fibonacci tool, this particular Fibonacci tool, and place it from where you see this swing high to the swing low. Can you see? To the swing low. What optimal trade entry simply means is that you're going to wait for price to come back to premium if you're dealing with a bearish condition, or to discount if you're dealing with a bullish condition. So this is what that means. So right here, as price came to this area, broken structure within the 3 a.m. to 4 a.m. This is the first entry you're getting. So right here, as you see this, you take to this from here. As price comes back, you look for a fair value gap in that area. Remember, optimal trade entry. So this is the fair value gap. It is basically a very simple strategy that anyone can trade at all. And then remember, I said if you want this trade to give you high probability trade entry, according to ICT, is that you must target 15 to 20 pips. That's the target, must be at least 15 to 20 pips. If not, you're not going to get a good trade entry. You may probably get stopped out. And if you look at this, you're going to look at this low. Can you see? This might be the area where liquidity is residing. So trade is basically trying to reach out to this place. And once you take this, your measurement tool, this particular one, let me show you that, this one, and you measure from here to here, you already have somewhere around 15 pips. And then if you bring it down to this place, almost 24 pips. So that's basically what ICT meant by that. Okay, so as price comes back to that fair value gap, you can see this is the fair value gap above equilibrium from your Fibonacci tool. As price came back to this place, we don't have a fair value gap here, and then this fair value gap coincides with another fair value gap here. This is basically what ICT call institutional order flow entry drill, IOFED type 1, institutional order flow entry drill. I've not taught that one. I'm just showing you what that means. So this is a very good trade. Okay, so you're going short from here. As trade comes to your area, to that level just above the fair value gap, and then you're targeting first 15 pips, and then you can expand based on the area of liquidity residing below here. So I've actually gone very basic explaining this to you. So when ICT said that, this is exactly what he meant. And then let's go to the other session, and then let's go to the other setup and see if we are going to see any in that place. Right here, price entered here, we are seeing a breakout structure in this place, okay, in this particular place, but we did not have any return to fair value gap giving us that particular entry. This is the fair value gap we have. Trade has moved on. The fair value gap is very big right here. So in this kind of situation, when you have a very big fair value gap, according to entry models, you're going to target half the fair value gap. It is called consequent encroachment as price comes back to this place, but it is already outside this place. So this is how to trade ICT silver bullet correctly. ICT silver bullet correctly. You're going to look out for entries, 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 entries. So let's look at this. At this point, price is coming to this place. Look at the low at this point. This is possibly where liquidity is residing, and we're going to target that. So let's look at what ICT is saying. As price comes to this area, let's have it here. We have a break of structure at this point, a break of structure at this point. Let's say break of structure. As price comes back to a fair value gap, you're going to focus majorly on fair value gap, to a fair value gap, to this place. And then let's check and see how many pips are we targeting from here to here. That's 15 pips according to the requirement for a high probability trade entry. So this is another entry. You're going to see it right here for a short position right here, and then your stop loss around here. So you've taken your profit right below this liquidity residing. If you go back, this is the best way and this is the correct way to trade silver bullet strategy according to ICT. I did not say that. This is basically what ICT taught by himself, not me. And then you're going to see a change in your trading experience. Okay, looking at this, I'm seeing a break of structure at this point, even though it's not giving me exactly what I'm looking at. Look at this. As price comes to this area, let's see if we have 20 pips from this movement to this place, just around 14 pips. I don't think this is a very good trade for entry, but look at this. As price comes back, I usually put my stop loss just above the fair value gap. If I eventually enter at this point, I may get stopped out above the fair value gap. But you can decide to see according to your risk capacity, maybe above the other block that you see over there, but you're going to focus majorly on fair value gap. So let's keep on seeing it, guys. Looking at it, we have something here entering this place, break of structure below here. Remember, optimal trade entry, measuring from here to here. This fair value gap is not at premium, so we are not going to take this trade. We'll let it go. So you have different trades to take in that particular session, in that same day. Okay, looking at this, do we have a trade entry? Yes, you may have a trade entry in that place, but I always want to have my trade entry giving me a very clear sign. Okay, so these are the things you're going to focus on while using the same strategy, guys. Focus on that using this same strategy. As far as it is not outside, you're going to focus on it. So guys, this is how ICT himself taught this same strategy. I hope this video is helpful enough, and if you have any question, let me know in the comments, and then you can watch ICT's video right here and see for yourself. I'm not going to hide anything from you, and make sure you subscribe because I've done the best for you, simplifying the same strategy for you and then giving you the best. Thank you guys for watching. See you in my next video.